So we've discussed in previous dynamic trader videos that one of the best times to trade is where that volatility typically is, and you're going to find that around towards the open, over data releases, and towards the close of a normal trading session. And today, what we're going to do, as we've done in previous sessions, is have a look around that sort of golden time, if you like. There are certain times of the day where it's just more speed in the markets there typically. Today we're going to look at that time between 2 and 3 o'clock. That's UK time for trading the Dow. That's just before and just after the open. And then also coming from around 7:30, 7:20 onwards up until around 9 o'clock. That's typically when you tend to get more movement in the markets there. That is not to say that you can't trade extremely successfully at those other times. It's just that sometimes times at a premium for people. You don't want to be sitting there for 8 hours a day and so on. So sometimes you might just want to focus on when the markets are really at their best and at their highest degree of movement. And that's what we're going to look at today. Some great opportunities from yesterday's trading, the 29th of January. Let's have a look at how we could have gone on to some of those trades by looking at the screen here. So it was actually a relatively quiet start, to be honest. The first trade was straight out of the gate, about sort of 8 minutes past 2. And remember, we're looking at 2-minute charts. There's going to be quite a lot of opportunities when you're looking at a 2-minute chart there. Sell trade, and to be honest, we got stopped out that relatively quickly for around a 14 point loss. So it's a bit disappointing, and nobody likes to start the day with a loser, but that's okay. That then flips us into a buy at around 420, and that gives us some really good momentum. And remember, as we've discussed in previous videos, there's a couple of ways in which you can run these opportunities. If you're new to this, good thing to do is to set that target in place. Put one in, so you don't have to think about it, not panicking about it, not getting those emotions about it. It's good to put one in there rather than sort of reading the charts and so on and reading the tea leaves, because you want that in place. So if it gets there, you're not panicking. You don't have to sit there staring at it constantly. Of course, as you start to understand more about the markets, and actually in terms of knowing yourself, knowing the psychology, knowing the emotional part of trading, you may then be more equipped to run those trades longer. And actually, if you'd have been able to do that yesterday, what that allows you to do is get on some of those really big, significant movers. And if you're putting a fixed target of, say, 20 or 30 points in, you're not going to be able to get any more than 20 or 30 points, are you? So you're cutting trades off at the knees, when actually sometimes they can go all the way to the head and shoulders, whatever. You know what I'm saying. Anyway, so it was a nice buy trade there. Got the 30 points. Eventually, then got stopped out. And that's the danger. You get a lot of profit there, but it then comes back and knocks you out. So again, depending on the way in which you're trading, if you're going for the fixed 30-point target, that was a good one. If you're trailing it according to the stop in order to try and pick up those bigger moves, not quite so good. You lost 4 points on that trade. But this is where the action really comes in here. So there was a sell trade there at 220, and you can start to see everything start to turn down. You've got red lines here. You've got this trend line in the middle going from blue to orange. That's denoting the longer term trend of this market. Predominantly, we're going to be happier taking trades in that direction. We're going to be less selective over the criteria, if you like. Still very specific, so very, very rules based. But when we trade against that direction, we need additional criteria. That's what I mean. So arrows again pointing down. It's orange here. We're red lines. All things are leading to a lower move on the market, and boy, wasn't it. Actually, just after the open, the market really did fall very aggressively. And this is what I mean about going for those fixed targets. It's great when you're starting off with, because what you're going to do is keep that scoreboard notching forward, and it hit 30 points within, well, what do we do? We're short from 85s. We're going to be going down to 55s. That's here, and that's in 2, 4, 6, 8 minutes. So you're getting your 30 points in 8 minutes. That's pretty great. But look how much the market then subsequently fell. If you're able to stay in these, look at the arrow here. It's trailing the price down. That's allowing you to move your stop down, continue to trail it, covering tighter, tighter, tighter. As the price starts to slow up a little bit, the arrows are going to continue to get tighter and converge towards the price. So eventually you got a pretty tight stop, and we get knocked out there at 28,770. That's around about 130 points. That was a really, really big winner. Brand new traders, they might be going for the 30 points. More experienced traders, able to be more in control of their emotional psychology side of it, they're going to be able to run those trades longer and really look to maximize those gains. So suddenly you've gone from minus 18, to suddenly a big 130 point winner. So now suddenly you're up, 112 points on those 3 trades, turning a tough start to actually a really, really attractive day looking so far. And you may decide to hang up your spurs then, and that's fine. But let's have a look. Let's fast forward to what happens towards the close, because There's further trades from there. At around 7:30, we then get a sell trade. And again, you start to see those things pointing down again. The orange line, the red lines here, the downward arrows, all of those things are pointing to downward prices. And that's the direction we're going to prefer going. It held steady for a few bars before accelerating, going down again, achieving that 30-point target, or trailing it down for a little bit more. Annoying to get high spikes here on before it had another wave down. But either way, it was still a 42-point winner for those people able to run the trade according to the stop. Do you see? So you're still outperforming by an extra 12 pips there. So that's pretty good. So potentially now we've gone from, 118 up to, 112 plus another 42. That is 154, I think. Really nice. Anyway, carry on, carry on, carry on. We then get a pretty smelly buy. We take a loss trade on that one. It's okay. That's fine. It's part of trading. The market then resumes that longer term trend. This is a low probability trade anyway. It's against the longer term trend of the market. You're going to get loss making trades. It's part of it. But the market then reacts, turns back in line with the dominant trend of the market. Again, arrows pointing down, red lines down, 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 down. And what does the market do? It falls really nicely into the close for another 30 points or so there. So all in all, if you look at the two different ways of trading, what have we got there? We've got 6 trades, okay, over those golden periods, if you like, the higher volatile periods from 2 till 3, 7:20 roughly till around 9 o'clock. Okay, that's UK time, so it's 5 hours different in the US, of course, Eastern time. Now, if you're going for the fixed 30-point targets, that's a 69-point profit day. £10 a point, that's £690 for that day. That's pretty good, right? However, if you're able to run those trades a little bit more, you're able to maximize the profit potential on this big short here, but also this really big short here, that was a 130-point day. £10 a point again, that's a £1,300 day. So that's effectively double the opportunity against going for those fixed targets. So interesting session yesterday. Profitable either way, but it's really down to a question of what is best for you. What stage are you at with your trading? Maybe at the beginning, just go for those 69. Go for the fixed point targets. Get that scoreboard ticking forward, getting those singles in cricket terms. And then, of course, what you can then do, look to go for the boundaries once you've got a bit more experience, once you're in, as well. I don't know where I'm going with the cricket analogy. Anyway, hopefully that's a useful video, and that's how we trade at Dynamic Trader. All the best, everybody. Have a good day.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.